Shares of Intel falling steadily today, despite posting its first profitable quarter since January of 2024. For today's Tech Check, Christina Partsinevelis has more on the street sentiment around this name. Christina.
Courtney, we should premise that, yes, shares are down from the earlier highs, but they're still positive, and they're up over 80% this year as Intel returned to profitability after 6 straight quarterly losses. But I have to say that Wall Street, based off of all the many notes I read, are somewhat skeptical of this turnaround. So yesterday I caught up with CFO Dave Zisner, and he told me that Intel is supply constrained on older chips. Demand for Intel's older hardware is coming, quote, faster than anticipated, driven by the Windows refresh. So that means enterprises aren't waiting necessarily for cutting-edge chips and technology when proven technology gets the job done, a theme that could eventually apply to AI buildouts as well. Intel is definitely shoring up cash with lifelines, $8.9 billion from the U.S. government, $2 billion from SoftBank, and a pending $5 billion deal from NVIDIA, our partnership. But foundry revenue still fell in the quarter, 2% lower despite cost cuts, and Wall Street just doesn't seem to be that convinced just yet on the foundry story, which is the manufacturing side of the business. Bank of America doesn't expect meaningful improvement in foundry's cost structure with peak capacity not until after 2030, so still years out. Citi reiterates a sell on Intel, believing Intel's foundry business is still years behind TSMC, Taiwan Semi. And then Morgan Stanley warning that the recent rally that we've seen in Intel's share price is really driven by geopolitical enthusiasm. In other words, the support from President Trump, and not necessarily company fundamentals. And Mizuho's Jordan Klein put it bluntly in a note: Intel remains a total, quote, show me story with a ton of unanswered questions, and he's saying no real AI exposure. He also said he hears zero mutual fund investors wanting to buy Intel. The positive read-through, though, are going elsewhere. AMD benefits from stronger server demand. We saw that Intel's doing quite well, and AMD does steal some market share from Intel. And then Microsoft could benefit from the Windows refresh. And then, of course, memory names that have been on a tear lately, like Micron, from these rising memory prices, Courtney.